Hello everyone and thank you for joining today's True Trading webinar. I am excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an Forex analyst, I am also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at elite wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first one is the new home sales in USA. The currency pair we're going to focus is the euro dollar currency pair. The next one is the unemployment rate. Okay, let's start with the first one, new home sales in USA. Now, let me first talk about what is new home sales in USA. New home sales measures the number of newly constructed homes sold in the United States during the previous month. It is a leading indicator of economic activity and consumer confidence, directly influencing the US dollar. A higher than expected figure signals a strong economy, which can strengthen the US dollar and push Euro USD lower. A lower reading suggests underlying weakness, potentially weakening the dollar and supporting Euro dollar higher. Forex traders also monitor housing supply and median prices for valuable additional context. The new home sales tracks the yearly number of newly constructed homes sold in the USA during the previous month. It is released monthly by the US Census Bureau and is considered a timely indicator of housing market health because home purchases stimulate a wide range of economic activity, including construction jobs, furniture sales, and mortgage lending. New home sales is viewed as a leading indicator of broader economic momentum. Now, let me discuss the event. On June 24th at 2 p.m. UTC time, we got this financial data report. The previous reading was 626K. K means 000. The forecast 638K, and the actual number we got is 580K, which is in red color. Now, let me discuss market context and pre-release expectations. Currency markets were expecting new home sales to increase from 622 580K number. This expected increase suggests now the number is less. The forecast was 626K and 638K market forecast. Following the release, the price action of Euro USD moved lower despite the weaker than expected housing data. Let me show you the price chart of Euro dollar currency pair. Here's the daily time frame. So we got the news announcement and market dropped over here on June 24th. After that, it did bounce back up as well. The price action suggested that forex traders placed greater emphasis on broader US dollar strength, Federal Reserve expectations, and overall market sentiment rather than the disappointing housing report alone. Although the economic data pointed to softer housing demand, the US dollar remained supported by wider macroeconomic factors leading to selling pressure on euro dollar currency pair. Now, why the euro USD moved down? There are several factors contributed to the bearish move in euro dollar currency pair. The new home sales missed the expectations. The forecast was 638K and the actual number we got is 580K. Broader US dollar strength outweighed the negative impact of the housing data. Currency markets remain focused on Federal Reserve policy expectations. US Treasury yield and overall market sentiment continued to support the US dollar. Euro weakness also contributed to downside pressure on euro dollar currency pair, and broader macroeconomic factors dominated the immediate market reaction. So the combination of these factors resulted in bearish movement for euro dollar currency pair following the forex news announcement. The key market drivers that we observed is the new home sales. The actual number we got is 580K and the forecast was 638K, which is weaker than expected. Softer US housing market activity, continued market focus on Federal Reserve policy expectations, market sentiment favored the US dollar despite weaker economic data, and the relative weakness in the euro supported euro USD to the downside. If we take a look at the euro dollar, this is the daily time frame and price action is falling down. But if we add any other currency pair, let's say I go to symbols, go to Forex, add the Euro GBP. Now, if we take a look at the Euro GBP daily time frame, then you will notice that the Euro GBP is also falling down. So it's not just the Euro USD that is going down. We also got a bearish decline inside Euro dollar and Euro GBP currency pair. So this is the chart of Euro GBP currency pair, and we go back to the chart of Euro dollar again. Over here, Euro USD is also falling down. So that's why I've said there's a relative weakness going on in Euro support, which supported the decline in Euro dollar currency pair. Now, although the housing report was weaker than expected, broader market sentiment remained supportive of the US dollar. This highlights that individual economic releases do not always determine currency direction when larger macroeconomic themes dominate market sentiment. Following the initial reaction, currency traders continued to monitor Federal Reserve communication, Treasury yields, inflation data, and additional US economic releases for confirmation of the broader market trend. So, as far as the trading outlook is concerned, short term bias is bearish. It's a downtrend going on in euro dollar currency pair. Despite the weaker than expected new home sales report, broader US dollar strength continues to support downside pressure on euro dollar in the short term. If upcoming US economic data remains resilient and Federal Reserve expectations continue to favor relatively higher interest rates, the dollar may remain supportive despite isolated weaker data releases. However, currency traders should continue monitoring upcoming US economic reports, Federal Reserve communication, and Eurozone developments for additional direction. So the overall analysis is the US home sales declined to 580K, falling below the previous reading of 626K and the market forecast of 638K, indicating weaker housing demand than expected. Under normal circumstances, weaker housing data would tend to pressure the US dollar and support Euro USD. However, following the news release, Euro USD moved lower as broader market forces continued to favor the US dollar. The market remained focused on Federal Reserve expectations, Treasury yield, and overall dollar strength, which outweighed the negative impact of the housing report. As a result, the Euro USD remained under pressure despite the weaker than expected economic data. The final key takeaway is the previous reading was 626K, forecast 638K, the actual number we got is 580K. The new home sales came in well below expectations, signaling softer housing market activity. Despite the weaker economic data, Euro USD moved lower as broader US dollar strength, Federal Reserve expectations, and overall market sentiment outweighed the negative impact of the financial report. The news release reinforced the importance of considering the wider macroeconomic environment rather than relying solely on a single economic indicator. Okay, the next report is the unemployment rate in Australia. This one is written a bit wrong. Let me fix that. Okay, so let's discuss the unemployment rate in Australia. The unemployment rate measures the percentage of the labor force that is unemployed and actively seeking work. It is a key indicator of Australia's economic health and a major driver of the Australian dollar. A lower than expected rate or strong labor market reading typically supports the Australian dollar and can push the AUD USD higher. A higher than expected rate or weakening jobs market may weigh on the AUD and push AUD USD to the downside. Forex traders also watch participation rate, employment change, and wage data for clues about labor market tightness and future Reserve Bank of Australia policy. Now, on June 25th at 1:30 a.m. UTC time, we got the data report. The previous reading was 4.5%. That was the unemployment rate in Australia. Forecast was 4.4. And the actual number we also got is 4.4%. Now, let me discuss market context and pre release expectations. Forex traders were expecting Australia's unemployment rate to improve from 4.5 to 4.4%, indicating continued resilience in the labor market and a stable economic outlook. The anticipated decline suggested that employment conditions remain relatively strong despite global economic uncertainty, reinforcing expectations that the Australian economy continued to perform steadily. Currency traders closely monitored this news release because labor market data provides important signals about wage pressure, consumer spending, and the future direction of Reserve Bank of Australia monetary policy. A reading below 4.4% would have signaled an even stronger labor market and supported the Australian dollar. A reading above expectations would have indicated labor market weakness and likely weighted on the Australian dollar. Now, as far as the market reaction is concerned, let me show you first the price chart of AUD USD currency pair. As far as the Australian dollar is concerned, market is falling down. I will discuss the technical aspect later. Now, why the AUD USD currency pair moved down after the news release? Well, there are several factors contributed to the bearish move in AUD USD currency pair. For example, the unemployment rate matched expectations at 4.4%, providing no bullish surprise for the Australian dollar. The market was expecting 4.4% and we got the exact same number. So that upcoming news was already been discounted in the price action. Markets viewed the data as unlikely to significantly alter Reserve Bank of Australia policy expectations. Broader US dollar strength outweighed the positive improvement in Australia's labour market. Global market sentiment favoured the US dollar. Currency traders continued to assess broader economic conditions beyond the headline unemployment figure. The combination of these factors created bearish momentum in AUD USD currency pair following the Forex news announcement. The key market drivers that we observed, the unemployment rate, the actual number we got is 4.4% as compared to the previous reading 4.5. So 4.4 is in line with the forecast. The improvement from the previous reading of 4.5%, that's what we observed. Stable market, labor market conditions we also observed. Broader US dollar strength is going on across the group of forex pairs. Technical and sentiment considerations. Although Australia's labour market remained resilient, the inline result failed to provide fresh bullish momentum for the Australian dollar. Currency markets often react more strongly to economic surprises than to data that matches expectations. In this case, broader US dollar strength became the dominant driver of market action. Following the initial reaction, traders continued to monitor Reserve Bank of Australia commentary, US economic data, global risk sentiment, and commodity prices for confirmation of the broader trend. Short-term bias, well, the short-term bias is bearish. It's a downtrend in AUD USD currency pair. The unemployment report confirmed that Australia's labour market remains relatively stable, but the absence of a stronger than expected result limited support for the Australian dollar. If upcoming US economic data continues to outperform or the US dollar remains broadly supported, AUD USD may under downward pressure despite Australia's stable employment conditions. However, forex traders should continue monitoring future employment data, Reserve Bank of Australia communication, commodity prices, and global risk sentiment for additional market direction. So the overall analysis is the Australia's unemployment rate improved to 4.4%, matching market expectations and declining from the previous reading of 4.5%. While the data confirmed continued resilience in the Australian labour market, it did not provide a positive surprise that could significantly strengthen the Australian dollar. Following the Forex news release, AUD/USD moved lower as broader US dollar strength and overall market sentiment outweighed the generally stable employment figures. The final key takeaway is the previous reading was 4.5%, forecast was 4.4, and the actual number is also 4.4. The Australia's unemployment rate matched market expectations and showed a slight improvement from the previous month, confirming that labor market conditions remain stable. However, the inline result failed to provide fresh support for the Australian dollar. As broader US dollar strength dominated market sentiment, AUD/USD moved lower following the release, creating a bearish short-term environment for the currency pair. Now, let us take a look at previous week global market trends. I'm going to talk about Euro USD and US dollar Swiss franc currency pairs. This is the chart of Euro dollar currency pair. weekly time frame, and we got this break over here in euro dollar. Market is now falling down. It is currently testing the support area. Inside daily time frame, the trend is down. We got this kind of a bullish pullback over here, and it seems to me market just want to move sideways first and then drop further over here. Regarding the US dollar Swiss franc, the trend is down in weekly time frame, but if we take a look at daily, the trend is up in daily time frame. So we might get a short-term, bearish pullback, but the trend is still up over here inside US dollar Swiss franc currency pair. Now, let me talk about the current week's macroeconomic events and data releases. I will be covering the key developments in forex market with a focus on fundamental analysis. Let's start with the first one. Building approvals month over month in Australia, and these are the basically upcoming important forex news events. The second one is the July 2nd, 12 p.m. UTC time unemployment rate in USA. Let's start with the first one. Building approvals, MORM stands for month over month in Australia. So let's discuss that. Building approvals month over month measures the month over month change in new residential building permits issued in the Australia. It is a leading indicator of construction activity, housing demand, and overall economic momentum. The report provides an early indication of future activity in the construction sector, making it an important economic indicator for traders and policymakers. Because the housing market plays a significant role in Australia's economy, the data can influence expectations for economic growth, and Reserve Bank of Australia, which is the RBA, a higher than expected figure signals strength in the housing sector and broader economy, which can support the Australian dollar and push AUD USD higher. A lower reading suggests cooling conditions, potentially weighing on the Australian dollar and dragging AUD USD lower. Well, it's already going down. So the building approvals measures the monthly percentage change in the number of permits issued for new residential construction projects across Australia. It is published by the Australian Bureau of Statistics and serves as a leading indicator of future construction activity. An increase in building approvals generally reflects growing confidence among developers and home builders, pointing to stronger investment and economic expansion in the Australian economy. Conversely, a decline may signal slowing housing demand and weaker economic conditions because construction contributes significantly to employment and economic growth. This report is closely monitored by investors and currency traders. Now, let me discuss market context and pre release expectations. Forex traders are expecting building approvals to rebound by 0.5% after declining minus 3.4% in the previous month. So we are expecting a positive number on July 1st at 1:30 a.m. UTC time. The expected recovery suggests that Australia's housing sector may be stabilizing following recent weakness. A positive reading would indicate improving construction activity and could reinforce confidence in the broader economy. Currency traders are closely watching this release because housing data provides valuable insight into future economic growth, business investment, and consumer confidence. A reading above 0.5% would suggest stronger than expected momentum in the housing sector, potentially supporting the Australian dollar. A weaker reading below expectations could indicate continued softness in construction activity and weigh on the Australian dollar. Now, why AUD/USD could move after this news release? Let me discuss the key drivers for potential price action, and that includes actual building approvals result versus forecast and the previous number, strength of Australia's housing and construction sectors, Reserve Bank of Australia interest rate expectations, Australian dollar strength or weakness, commodity prices, particularly iron ore, broader US dollar strength or weakness, global risk sentiment, and investor confidence, and revisions to previous building approvals data. Because building approvals provide an early signal of future economic activity, the report can influence expectations for Reserve Bank of Australia monetary policy and overall Australian dollar direction. As far as the technical and sentiment is concerned, AUD USD currency pair may experience increased volatility around the news release time due to the report's importance as a leading economic indicator. A stronger than expected reading would likely support the Australian dollar and push AUD USD higher. A weaker than expected result could increase concerns about slowing economic activity and place downward pressure on the currency pair. As far as the trend is concerned, it's already going down. I mean, the AUD USD keep falling down and is a support down over here. So we will see how the market is going to react. But the way I see market outlook is kind of slightly bearish. So I would say my short-term bias is sideways, or neutral to slightly bearish in AUD USD currency pair. The upside potential for AUD USD is there if building approvals exceed the 0.5% forecast, signaling improving housing activity and supporting the Australian dollar. Downside risk for AUD USD is there if the data falls below expectations, suggesting continued weakness in the construction sector and weighing on the Australian dollar. Forex traders should expect elevated volatility around the releases as markets reassesses expectations for Australia's economic outlook and future Reserve Bank of Australia policy. The overall analysis is the Australia's building approvals report is expected to recover to 0.5% after contracting by 3.4% in the previous month, suggesting that housing activity may be stabilizing. The release is important because it provides an early indication of construction activity, investment, and future economic growth. A stronger than expected result would reinforce confidence in Australia's housing market and could support the Australian dollar. Conversely, another weak reading would suggest that the housing sector remains under pressure, potentially reducing confidence in Australia's economic outlook and weighing on the AUD. The final key takeaway is the previous reading was minus 3.4%, forecast is 0.5%, actual data not yet released, but it is going to be released on July 1st at 1:30 a.m. UTC time. AUD USD traders will closely monitor Australia's building approvals report for fresh signals on housing market strength and overall economic momentum. A stronger than expected result above 0.5% could support the Australian dollar and lift the price of AUD USD currency pair, meaning we might see a bullish price action. Market would go up. While a weaker reading may reinforce concerns about slowing construction activity and place downward pressure on the currency pair. Next one is the unemployment rate in USA. Date and time is July 2nd, 12:30 p.m. UTC time. Now, let me first discuss what is unemployment rate in United States of America. The unemployment rate measures the percentage of the US labor force that is jobless and actively seeking employment. It is one of the most important indicators of the health of the US economy and a major drivers of the US dollar. This financial report provides valuable insights valuable insight into labor market conditions, consumer spending potential, and overall economic strength, because employment is a key factor in inflation and monetary policy decisions. The data is closely monitored by forex traders and the Federal Reserve. Let me show you the chart of euro dollar currency pair. A lower than expected figure signals a tight labor market and a strong economy, which can strengthen the US dollar and push euro USD to the downside. Well, it's already going down. A higher reading suggests labor market weakness, potentially weakening the US dollar and supporting the euro USD higher. The previous number was 4.3%. Forecast is also 4.3%. Actual data not yet released. So the unemployment rate, this financial indicator, is widely used to assess the overall health of the labor market. A lower unemployment rate generally reflects a stronger economy, rising consumer confidence, and increased spending activity. A higher unemployment rate may indicate slowing economic growth and weaker business conditions in the USA, because labor market performance plays a central role in inflation trends and Federal Reserve policy decisions. This report is one of the most closely watched economic releases in the forex market. Now, let me discuss market context and pre release expectations. Forex traders are expecting the United States of America unemployment rate to remain unchanged at 4.3%, indicating a stable labor market despite ongoing economic uncertainties. A steady unemployment rate would suggest that the US economy continues to maintain relatively healthy employment conditions. However, traders will also examine the broader employment report for signs of strengthening or weakening labor market momentum. A reading below 4.3% would indicate a tighter than expected labor market, potentially reinforcing expectations that the Federal Reserve could maintain higher interest rates for longer. A reading above 4.3% would signal labor market weakness and could increase expectations for future monetary policy easing. Now, why Euro USD could move after this news release? Let's discuss the key drivers for potential price action, and that includes actual unemployment rate results versus the forecast and previous, the non-farm payrolls employment data report, also known as NFP, labor force participation rate, average hourly earnings and wage growth, Federal Reserve interest rate expectations, US Treasury yield movements, US dollar strength or weakness, and broader market risk sentiment. Because the unemployment rate is released alongside other major labor market indicators, traders typically evaluate the complete employment data report before determining the likely direction of the US dollar. As far as the technical and sentiment considerations, Euro USD may experience significant volatility around the news release time, because the US employment report is one of the highest impact economic events each month. A lower than expected unemployment rate would likely support the US dollar and push the Euro USD lower. As far as the trend of the euro is concerned, it's already going down. So we might get a bullish leg first, and then market might continue the decline. However, follow through price action will also depend on the accompanying non-farm payrolls, wage growth, labor force participation rate, Federal Reserve expectations, and overall market sentiment. Forex traders should evaluate the complete employment report rather than relying solely on the unemployment rate headline. The short-term bias is neutral to somewhat bearish in euro dollar currency pair. So downside potential for euro dollar if the unemployment rate falls below 4.3%, signaling a stronger labor market and supporting the US dollar. Upside potential for euro USD is there if the rate rises above 4.3%, indicating labor market weakness and weighing on the US dollar. If the reading matches the 4.3% forecast, market attention will likely shift to non-farm payrolls data report, the wage growth, and other employment data for additional price direction. Forex traders should expect elevated volatility around the financial news release time as markets reassesses the outlook for the US economy and future Federal Reserve monetary policy. The overall analysis is the US unemployment rate is expected to remain unchanged at 4.3%, suggesting that labor market condition remains relatively stable. This report is particularly important because employment conditions directly influence consumer spending, inflation, and Federal Reserve policy decisions. While a stable unemployment rate would indicate continued resilience in the labor market, any unexpected change could significantly alter market expectations for future interest rates. Forex traders will also closely monitor non farm payrolls, average hourly earnings, and the labor force participation rate, as these financial indicators provide a more comprehensive assessment of labor market strength and the broader economic outlook. The final key takeaway is the previous reading 4.3%, that's the unemployment rate. The actual forecast, the forecast is 4.3. The actual data not yet released, but it is going to be released on July 2nd at 12:30 p.m. UTC time. Now, let us take a look at current week's Forex market trends. I'm going to discuss the euro dollar, AUD, USD currency pairs. So, let's start with the euro USD. The weekly time frame, we got this break down over here, and market is probably going to move sideways, and then I expect further weakness. So, in daily time frame, we got this little pullback over here, which might go up a little bit first, but after that, I expect further weakness in price action of euro dollar currency pair. So my forecast is bearish, overall bearish. We might get a bullish price action on a short-term basis in euro USD, but after that I expect further weakness in price action of euro USD currency pair. The trend looks down. Next, we have the Australian dollar, AUD USD currency pair. We got this breakdown finally over here. And this is telling me that market is going to move a little bit sideways first and then expect a resumption of the downtrend. In daily time frame, it's already going down. This is a break of this bullish trend line, then a retest. This was a retest right over here. And after a retest, AUD USD currency pair resume the downtrend. Next one is the USD CAD. USD CAD currency pair. This is where we got the bullish breakout, and we also got a bullish breakout above this horizontal resistance level, which is a good sign that market wants to go up further. Usually these things show a pullback and then goes up, or sometimes we just keep getting further bullish price action. So in daily time frame, the trend is still up in USD CAD currency pair. Market is moving up. Next one is the spot gold. As far as the gold is concerned, this is where we got the breakdown, and the forecast is somewhat bearish. So maybe on a short-term basis, we might see a bullish rally in XAUUSD spot gold, but after that, I expect further weakness in price action of spot gold. It's a downtrend going on in daily time frame. I will take a few minutes now for questions and comments. And if you have any questions or comments related to today's Forex trading webinar, please feel free to type them inside the chat box. I will be happy to answer your questions. Okay, let me read some of the questions. Okay, the question is related to the forex, the use of market forecasts in personal investments. Well, that's a fair question. My personal approach is to treat market forecasts as one of many inputs rather than a definitive guide. I find them useful for understanding broader market trends, assess the risk, but I do not rely on them heavily for specific trade decisions, given their inherent limitations and unpredictability. Ultimately, I prioritize diversification, long term goals, and fundamentals over the short term market predictions. Okay, so let us review what we have learned today. Well, we discussed about the building approvals, and we also discussed about the unemployment rate. I also showed you the price charts of euro, dollar, AUD, USD, USDCAD, and spot gold. I presented my technical market analysis. So these are the assets to watch out for profits. What you should do next, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about Forex trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for staying with us. See you at the next trading webinar on Tuesday, July 7th, 2026, 12 p.m. UTC at the same time. That's all from my side for now. Have a great day and goodbye.